Bitcoin has been ranging sideways for the last 30 days. Is this a bullish consolidation before the next leg up due to a potential Bitcoin ETF approval? Or is this the ultimate bearish chart pattern that all the bulls fear? In the last few days, we've had positive and negative news articles assessing the potential approval of a Bitcoin ETF from various analysts. And I do think we are in a phase in the market where the whales are playing games on us, and there is a very ugly chart pattern I'm seeing. For those of you who've been in crypto for the last year, you may have heard of this distribution pattern.
When Bitcoin got rejected from the $46,000 level, it liquidated many soldiers from our brave Bulls army.
Chill out, bro. We just need to understand where we're at in the 4 phases of the market.
I guess if we knew what phase of the market we're in, we can plan an appropriate counterattack.
So Bitcoin has been trapped in this trading range between $45,000 and $40,150. Bitcoin really needs to clear or to print a daily candle above $45,000 to really send this prices flying higher. Let's take a look at what the Asian traders are looking at, the Ichimoku cloud. So we can see that it did wick down and freaked a lot of people out, but it did find support on top of the Ichimoku cloud. So the Eastern traders saved the day probably, and the Western traders are looking at the trend-based Fibonacci extension tool, and we can see that it did not yet make a one-to-one move, and so there's still a potential to get to the $47,000 level. And if we take a look at the visible range volume profile, we can see that, okay, it's not that clear here, but we have this, we are above this volume cluster, so that is a positive sign. The on-balance volume does look good. It's been trending up this whole time and it's found support above its 21 simple moving average. If we bring out the support and resistance lines, we can see, oh, okay. It did break above this bullish breakout resistance line, but now it's dropped back below it underneath this previous swing high, which is the volume of this swing high on the price. Now flipping over to the 4-hour chart to see the price in greater detail, we can see that Bitcoin is above its 4-hour 200 exponential moving average, which is great. And if we take a look at what the Eastern traders are looking at, the Ichimoku cloud, we can see that it is in a bullish phase of the market at the moment and looks great. The Western traders are looking at the Fibonacci retracement tool. So from this swing high to this swing low, we can see that it has actually rejected from the 0.786. Oh, and it's currently below the golden ratio, the 0.618, which may not be a good sign. This 4-hour candle still has another 2 hours to print at the time of making this video. Let's take a look at the visible range volume profile, and I mean, it's nothing different from the daily chart, just more detail here. We can see that it is finding support. So there's some positive clues right here for some more bullish momentum ahead. The 4-hour on-balance volume does look pretty bad because it's been declining throughout this whole consolidation, and it is below its 21 simple moving average, so that is a negative sign. And if we bring out my support and resistance lines, we can see that the on-balance volume never made it above this consolidation area where the volume was previously at. Even though the price made higher ceilings, the volume failed to follow through along with it. That is a pretty bad sign, and it's also below its last point of support, which was this swing low on the price right here. So this has me concerned that we could be in a distribution pattern. The ultimate bearish pattern I'm talking about is the Wyckoff distribution schematic. During phase A, demand dominates, price runs up, finds a little bit of resistance, but then eventually pops even higher to create what's called a buying climax. And this creates the upper trading range, which is $45,000 in this case. After that, we have an automatic reaction where supply dominates, and this creates the bottom of the trading range at $40,150. Next, there's a secondary test and it fails to get above the trading range, and that completes phase A where demand dominates. The volume plays an important role in understanding the context of the price movement. Here I'm using the BTC combined volume indicator, which combines all the volume from Bitfinex, Coinbase, Bitstamp, etc. In phase A, we can see that volume was rising along with the price action, so the effort equaled the result. Eventually, when supply took over, we can see that there was actually declining bear volume, so the effort was less than the result. In phase B, demand equals supply. Supply takes over and drops down to show a sign of weakness in phase B. Usually price drops below the trading range, which is why it's called a sign of weakness. But in this case, it held above it. eventually there's an upthrust in phase B. As you can see, this is a difficult phase for traders because price just ranges sideways and chops up and down. And the volume is also confusing because it remains relatively flat. Even though the price eventually ranges higher, the effort does not equal the result. Now we are in phase C, which is the testing process of remaining demand. Here we have what's called the upthrust after distribution, which traps all the bullish traders who go long and price drops back down into the trading range. And we have rising bearish volume, so the effort equals the result. Now moving on to phase D, supply dominates. I should note that this Wyckoff distribution schematic will be invalidated if price gets above this trading range once again at $45,000. It would actually need to cross above this upthrust after distribution at the $45,865 level. But so far we're still inside the upper part of this trading range, so supply is dominating. And it does look like it created its last point of supply underneath the trading range. I'm expecting price to do something like this. Eventually price breaks below the bottom of the trading range, showing its final sign of weakness. And then we are in phase E where supply is in control. But to really confirm phase D and E, bearish volume really needs to be increasing so that the effort is equal to the result. As long as price remains within this upper part of the trading range and doesn't exceed the upthrust after distribution at $45,865, the Wyckoff distribution schematic is still in play. A move above that will invalidate this entire 30-day sideways distribution pattern. And price dropping below the bottom of the trading range at $40,150 would confirm this Wyckoff distribution, and we can expect powerful downside action to come, as supply is in control.
Anticipation of Bitcoin ETFs are pumping the price over the $45,000 level.
Beware, my friend. There is a phenomenon in trading called buy the rumor and sell the news.
But why would anyone sell on such a bullish event with billions of inflows coming into a Bitcoin ETF?
Those inflows won't happen overnight, and once the news hits of an ETF approval, what other news event can top it?
So, if there is nothing greater to look forward to,
The demand loses momentum and the whales sell.
So if we are actually in a buy the rumor, sell the news situation with a potential Bitcoin ETF, this bearish chart pattern really does align well with what's going on for the last 30 days, where the whales are manipulating the price.